This is the S2G podcast. I'm Tanya Beckritzes. In this insight-rich whirlwind of an episode, Damien Ma explores China's rise as a tech and industrial powerhouse and its implications for investors and business leaders navigating today's geopolitical landscape. This podcast is for informational purposes only and should not be construed as legal, business, tax, or investment advice, nor should it be used to evaluate any investment or security. It is not directed at or intended for any current or prospective investor in any investment vehicle sponsored by S2G. Investing involves risk, including the potential loss of capital. References to specific companies are for illustrative and educational purposes only and do not represent an endorsement or investment recommendation. The views expressed by podcast guests are their own and do not necessarily reflect the views of S2G. For more important information, please visit s2ginvestments.com/disclosures. In our recent episode on the age of adaptation, Sanjeev Krishnan shared that geopolitical shifts were one of the major drivers of today's volatility. And when it comes to shaping a smart adaptation strategy, there may be no country more important to understand than China. In this episode, S2G's managing partner, Sanjeev Krishnan, sits down with Damien Ma, scholar, author, and founder of MacroPolo, for a wide-ranging conversation on the evolution of China's role in the global economy and what it means for investors, business leaders, and operators across sectors. From industrial policy and innovation cycles to supply chain strategy, climate risk, and the rise of multipolarity, this episode explores how China became a global tech giant and why that matters for anyone underwriting the future of critical industries. Packed with context and real-world relevance, this episode helps decode the implications of China's strategy and its impact on global supply chains, innovation, and the flow of capital. So let's get into it.
All right, Damien, thank you so much for joining the podcast.
Lovely to be here, Sanjeev. Good to see you again after the summit.
We obviously hung out in the lead up to the summit, but I want to disclose the start how we first met, which involves my second or third favorite genre of food, Szechuan. I think we met at a Szechuan restaurant in DC.
Was it Great Wall? Because I think that closed. Unfortunately, that used to be my go-to.
Yeah, it did close, and it just was more like a different time for U.S.-China relations, politics globally. I think it was probably 2007 or 8 that we met, maybe around that time anyway. But before we get into the pre and post Olympics, which I think is a great framework, is tell me about you. Where did you grow up? What got you interested in the work you're doing now?
Yeah, I grew up in Bernie Sanders country, Vermont. Bernie Sanders was the mayor of Burlington when I was growing up, or he had just served his term or something like that. Wasn't really thinking about China that much. In college, I had really wanted to, I think, be more of a foreign correspondent. I was always interested in the world. I thought that was a good way to get boots on the ground, travel to different countries, and really cover what's going on in the world. But then, I don't know, something something deep inside me told me that maybe journalism, media was not a good industry to go into. I was always interested in econ and political economy, and I really looked at China, I guess, as a giant case study of development, really. How does a country of that size, of that magnitude, how it catches up in terms of growth? So China, to me, is just not so much China itself. What can you learn from the China experience? Can it be applied to other countries, et cetera? And it turned out, obviously, China to be quite important. And also U.S.-China has been the gift that keeps on giving in terms of work, in terms of the importance of it. So I went to graduate school at Michigan. And at the time, there were a lot of sort of generations of China specialists that got trained out of Michigan. So I went there. And so after that, I worked in China for a little bit in Beijing, doing PR and communications, and then decided I should come back and landed in DC because, frankly, that was the only organizations that hired me, which is the U.S.-China Business Council. That's the poster right behind me. So that was my first job in DC at U.S.-China. That was like 2005, 2006 or something like that. So I've been at this for 20 years now.
Before we get to the Olympics, I've been thinking a lot about Richard Nixon lately, just because I think he took us off the gold standard. Moore's Law started just around his administration, this sort of boomer generation. But the one thing that I'm curious your thoughts on, how much attribution should we give Nixon and Kissinger around the China rapprochement sort of the Nixon to China strategy and then their eventual entry into sort of WTO and their place in globalization.
Yeah,
Are they
I
the
think
OG architects of this or not?
I would say, yeah, it was a big deal. It was a big strategic move at the time. You could probably bookend this period of 50 years of US China relations before they turned to what it is today from 72 to 2022, let's say. It's a pretty good 50 years of continuation of the Nixon pivot, so to speak. And yeah, I think people who study this know it was because of the mutual threat that US China felt toward the Soviet Union at the time that brought them together. So there was a very strong geopolitical focus rationale back then, which eventually faded away.
What happened pre-Olympics, post-Olympics to change the arc of this relationship?
Well, the Olympics was still the Hu Jintao era, right? So there are a couple of things. So it was a different leadership. If you talk to a lot of people, colleagues that kind of were in China during that time, there was just a sense of high optimism, dynamism. If you were in Beijing, Shanghai, there was underground punk rock. There was a lot of culture. Things were moving forward, progressive. And I think it was all because China was like getting ready for the Olympics. It was their big coming out party, so to speak. There's so much money, political will, everything was behind it. And so the society just felt like there's a lot of possibilities. And there were droves of expats that came in. I used to play at like open mics and stuff when I was there. And like just.
What'd you play?
I played guitar since I was like 14, so I just played a bunch of like whatever cover songs at the time. But I feel like I'm talking about a really old school China right now. But anyway, so then the Olympics come, and it was obviously a generally pretty ringing success for China. They did a fantastic job. Everybody was mesmerized. And then soon after that, financial crisis hit, probably about 3 or 4 months later. And I think that was a pivotal moment that kind of changed Beijing's perspective on the United States, where they really, I think, judged that the United States screwed up. And I had some people whisper to me privately, so there was this sense that China was learning from the United States for a long time. But then how could the master screw up like that? And so I think that there's a perspective that kind of changed on what the U.S. was, whether it was still able to kind of be the definitive leader, so to speak. And it didn't change overnight, but like that was the start of the shift. It kept on going that way. And then, of course, 3 or 4 years later, you had a change in administration. You had the Xi Jinping era come in. And so that kind of pushed things in another direction.
Pre-Olympics, I think my first trip for work was 2003, 2004, when I was at IFC. And there was a guy there that sort of compared what the internet was to sort of technology, China was to globalization. Engine of productivity, labor arbitrage, et cetera, et cetera.
Yeah, there's not another time in recent memory where 950 million people just came into the global labor supply like that.
Yeah.
I mean, that's 3 times the U.S. entire population. That's China's labor force, right?
Where is China today in that respect from a macroeconomic perspective? We'll get into the politics, but are they at the middle income trap level, or are they at a point where they're not going to be in the middle income trap necessarily because of innovation, central planning, et cetera, et cetera?
Yeah, the World Bank has changed its definition a little bit, but I think they're basically now on the cusp of high income, if not already basically there. But they're certainly facing a number of structural challenges that they haven't faced for the last 35, 40 years. The growth rate's been cut by about half from its peak. It's going through a pretty significant adjustment period. And for any major economy like that, China's about a $19 trillion economy, these adjustment periods are really hard. It'd be hard for Japan, it'd be hard for the United States, and it's certainly very hard for China because they've been going gun-ho in one direction for 30, 35 years. So they're trying to change and adjust, and the diagnosis is correct that they should be doing this. It's just how will they execute it, and can they avoid some really hard landings further down the line if they don't manage this well, because it is very tough.
Yeah, one of the things that would be interesting is my old firm used to say, China got old before it got rich. This was 2012, 2013, 2014 macro research. But what's interesting to me, at least the way I observe it today, is they used kind of their version of NIH, their version of National Science Foundation, their version of DARPA and other things to really invest in fundamental IP and R&D, where maybe they don't need to go through the investment to consumption, economic transition, they can still be a global leader in some of the industries of the future, and they can just export to the other sort of emerging markets. Not a future for China, just still an export model, but exporting things that are part of that future that Latin America may want, Africa may want, other parts of Southeast Asia may want.
Yeah, I think China sees it doesn't have as many choices now, so it is trying to export a lot more to the global south, other developing economies. The way I talk about China now is that for a host of sort of technology products, it's basically 100% of the quality at 60, 70% of the cost. And this is not just single products, but it's across a lot of product categories. Clean energy is a big one. There's been some whispers, some policy advisors have played around with the idea of maybe China should have a green Marshall Plan. It's not whispered. It's been put on the table. It's just whether they'll actually do it or not.
There's this famous, have you heard about this famous, I don't know, it's folklore, but this John Deere tractor story? Where
I've heard it, but I'm not sure if I'm totally familiar with it.
So there's a John Deere tractor that was like showcased at a trade show. It had a dent on it. Like some Chinese company made it with a dent. And it was like, the joke was like, it was sort of,
Total
yeah.
replica, yeah.
I feel like, how did China move on from that reputation to be like legit IP leaders, not just because they had a patent quota to file, but like legitimately a technology powerhouse in key economic sectors? How did they do that? Was it similar to the US playbook of investments in fundamental science, investments in sort of fundamental university R&D hubs? Or how is that playbook done where they've become tech parity?
Yeah, certainly not 100% tech parity, but on many things, parity are perhaps a leader already. China has done a really good job at leveraging second mover advantage, and they benefit a lot from that. And they did a really good job leapfrogging certain things. I'll give you one example. If you remember back in it was maybe the late 2000s, early 2010s, everybody was freaked out about 3G standards, mobile technology standards, like TDS, CDMA. China was supposed to roll out this 3G thing. And then they did, and it didn't really succeed. And 4G, what did they do? They didn't do anything. And then they basically invested a whole bunch in 5G. Obviously, Huawei is the company that's been doing that. So they basically said, 3G, we failed. 4G, we're going to sit out because we're not competitive. And they just went straight to 5G. I guess my question would be to American companies is like, where's 7G? Rather than say, yeah, China is leading in 5G because we didn't uninvest in it. So maybe we sit out 5G, or maybe we also sit out 6G and we just go straight to 7G if that's possible. But China's done that time and again. The other example is, you remember in the 2010s, there was such breathless commentary about how China became a cashless society, right? Oh, the QR code, everything's paid on the phone. Part of that was just China didn't have a very developed credit card system at all. They had no legacy technology to overcome. And they caught up at a time when digital technology, QR codes and those kinds of things were really mature. So they just went straight from basically no credit card system to the cashless system, right? So it's not so much that that technology was all that interesting or all that frontier. I mean, we all know how to do QR codes, but China just decided we're going to, as a society, just leapfrog right there. They're a huge market, so then everything became cashless very quickly.
On that topic of the clustering advantage of all this supply chain, if you have the Pearl River Delta supply chain, does that allow for innovation, or is that more just unit economics of production?
It allows for a specific type of innovation, which is manufacturing innovation and scaling, in particular, commercialization. So a lot of Chinese innovations coming into commercialization part of it, a lot of learning, knowledge gained from the actual making of stuff, manufacturing, and absolutely clustering agglomeration. Both the Yangtze River Delta and the Pearl River Delta are just enormous. So pretty incredible what they've done in those two deltas. And I think one of the defining characteristics, besides clustering, is the other C, which is competition. There's so much competition everywhere in China.
Between regions and between. Yeah.
And every level. Government competes with firms, firms competes with government. Everyone is competing. Part of it is just because I think there's a scarcity of opportunities, and everybody wants to be in those areas, which is also why you often see an overcapacity or bubbles in China, why there are like 250 EV firms.
In a period of hyper-partisanship in American politics,
Yeah.
the most bipartisan thing to be at the moment, at least in DC, is anti-China. That's where I feel like Democrats and Republicans float within that zip code of, hey, China is not an ally. They're either a strategic competitor or a strategic adversary. Where is that that's valid to have that point of view? And where is that like short-sighted and perhaps you're playing more checkers and not chess, either economically or geopolitically?
Yeah, fortunately or unfortunately, I think competition's baked in right now. I think the unclear part is, okay, we're absolutely going to be competing. How you define China as a rival, whatever, but it's going to be pretty intense competition. But I think a lot of this comes down to the fact that I think people woke up to the fact that the United States no longer has an industrial base that is capable of building that foundation for the future. It turns out this fourth industrial revolution, a lot of it has to be built, manufactured, and China has a grip on a lot of those manufacturing bases and also scaled up. They're actually not necessarily good businesses, but China has a lot of capacity to build that if they choose to, and they have. And so this big debate now is, how does the U.S. get that capacity back?
I remember doing a project, actually it was in the egg sector, in fact. China's largest market, they like it as a percentage per capita. But I got meetings on a Saturday with government officials because we had to do due diligence and we were like doing all this stuff. And like permitting, they're like, if there was a permitting issue, they're like, what do you need? How do you like American permitting versus permitting in China? Very different approaches to like inviting business in, getting the permits they need to operate, and whether it's private or public sector,
Yeah,
it's an issue that has led them to
yeah.
win
I mean,
vis-a-vis these.
there's basically no NIMBYism
Yeah,
in China.
it's
And
reverse NIMBYism.
there's been
Yeah,
some protests over some chemical plants, but by and large, the government is pro development, pro building things
yeah,
in general, because that's what they've done to generate GDP for a long time.
yeah. And those trade-offs are there everywhere, but I think they've just taken a point of view on those trade-offs. Good or bad, we'll find out. But generally, it's
Absolutely.
led to lots of growth. Labor cost thing, though, is overdone now, right? If you look at from the time they entered the WTO, that labor arb is fairly compressed, just for people that don't know.
Yeah, they've totally passed a Lewis turning point. For those who don't know, that's the point at which sort of the labor supply becomes constrained and labor costs go up. And the famous short clip, I don't know if you've seen it, or Tim Cook as talking about why Apple's in China, not because of labor costs, but because he talks about machining technicians. He said in the US, you could barely fill the room of machine tooling specialists. He said in China, you can fill football fields. I'm sure he was exaggerating, but his point was like, there's just so much talent. Going back to the clustering effect, the two deltas, like we don't have that kind of concentration of human capital that can do these things. And so a lot of that comes down to the fact that China is the heart of the consumer electronics industry, and you just have to be there. There's no other hub like it.
If you think at a systems level, we do food and agriculture as energy as oceans. You have to underwrite the role of China today and then in the future and make a call for when you underwrite these companies, because the systemic implications of how China behaves impacts soy acres, corn acres in America,
Yeah,
impacts shipping rates and shipping decarbonization. It impacts obviously
yeah,
power and the cost of
yeah.
power. And
And I'm sure you guys keeping track of China's pork consumption, because that affects a lot of the ag commodities, right? Because it's pig
yeah,
feed. So
yeah,
China's,
exactly. So I think you have to underwrite China if you're going to underwrite food and ag, energy, and oceans, which is why I wanted to invite you to the podcast and to our summit. And I want to get your thoughts on the role of China in this. The summit's thesis was there's four transitions happening. Those four, it's called the age of adaptation, CPU to GPU, unipolarity to multipolarity, US dollar, and the 10 years defining sort of cost of capital to a potentially monetary shift of an unknown price of
mhm.
money. And then this underwrite potentially from 1.5 to 2.5, just given just slow we are right now globally to address this issue. If you think about the cocktail of those four things, always China positioned if you believe that those four things are going to happen in your view. Maybe we just go from the
um,
CPU to GPU if it's easier, just go one by one.
China's definitely still constrained on chips. There's been some loosening of controls with NVIDIA's chips, but they're still constrained. And my understanding now is it's not even necessarily the actual chips themselves, but it's the chip making equipment, ASML. They really would like to have access to that, obviously, to be able to make the frontier chips but that's just not really going to happen anytime soon. So they're positioned, they're still a step behind or several steps behind on chips. But when it comes to talent, 47% of the top 20% AI talent globally are from China. Some of them work in the United States, other places. So nearly half of the top 20% talent are in China. So they have plenty of AI talent, which is why they can come out with DeepSeeks and other kinds of AI models that are basically at parity now.
Based on DeepSeek, there's like a belief in the structural load growth because of how power intensive. You spend a lot of time in China. Are they assuming the same power intensity of AI as the hyperscalers are, as we are in America?
They are. Their advantage is that they have the electricity infrastructure, and that's something we are so far behind. I think if we want abundant intelligence, we need abundant electricity. And
Yes.
China now absolutely leads on the electricity side. And they've done a lot of infrastructure projects like the high-speed rail, right? That was essentially electrifying a lot of the grid. And so from that, they kept on going. They never stopped building nuclear. We've been in a nuclear drought for 50 years.
Let's move on to sort of multipolarity. What is your underwriting, if you will, of sort of China's role in a multipolar? Like, what is it that they seek economically or geopolitically?
Oh, that's a $1 million question. Capabilities are a lot easier to see than intent. Intent is always a little bit murky, right? What does China want? How does China envision itself? And the problem is China has never been that clear. I find it very difficult to believe, and having looked at China for such a long time, that they would really aspire to the kind of global hegemonic model that the US has led for the last, I guess you could say, 75 years roughly. But China clearly wants, I think, a dominant regional dominant power. That seems pretty likely. And it's more difficult for China because they have a lot of fairly strong neighbors and they border many more countries than we do. So geographically, they're in a less advantageous position. But I think certainly they would want to be the most important, the most influential power regionally.
Yeah, I think one bipartisan thing is anti-China in DC. The second bipartisan thing, I think, I'm not as certain about this, is a desire for much greater burden sharing, whether you're
Yeah.
America first about it or you're just more, we can't, we've got to take care of our people. What burdens are China willing to take on? What burdens do you think the global sort of G7 would let China take on?
Yeah, I think that's a really good question. I think as of now, they seem to want the benefits, but I don't think they feel ready. They're really to take on all the burdens. And I think to be the kind of global superpower like the United States for the last 75 years, it's not just a question of can you become one? Are you capable of? Sure, maybe.
Yeah.
But also, do you desire to actually want to do that? Like there are certain costs, there are certain burdens. There's a lot of, let's say, responsibilities that come with it. It's not just conferred to you for free, that you can just dictate things, set the rules, but then no burden, right?
Just to get
So
maybe, there's a couple of things that are very niche for us that we've observed, just given our sectors. As an example, soy, and which really influenced American agriculture since,
absolutely.
two things is ethanol and soy. It seems like China is, again, geopolitically levered more to Brazil and Argentina and other markets.
Yep.
And so there isn't that same leverage that the US has. They're probably a swing thing. If there's a weather event in Brazil, they'll take on this. The second has been around exporting kind of deflation in solar markets or even battery markets. And then obviously in the marine sector, Chinese
Shipbuilding.
shipbuilding and other things are important. It seems like they have a lot of the leverage and critical minerals. Like, what leverage does the U.S. have over China? Like, they buy the treasuries, they have the critical minerals, and they've now diversified away from America. Like, where does the U.S., is it GPU chip access? What is it that the U.S. has an upper hand on China that they could use as an economic stick?
China is absolutely now a production superpower, right? On the production side, like capacity production. I just saw something. I think the FT had a big piece a couple of days ago. They're now making sort of artificial diamonds now, and they've driven down the price of diamonds. Just as soon as the Chinese can get in, like any sector, the prices just collapse, and then they gain market share. But the U.S. really continues to be a consumer of last resort, huge consumption power. If you're going to make all this stuff, you have to sell it somewhere. I think what the Chinese are really concerned about is this idea of, can the US actually have a team of America that can alienate China? And that would be G7 plus. All the big markets that used to consume Chinese products cannot. So yes, you can say, okay, maybe we'll pivot and go to the global south. In terms of per capita income, there's only so much
Yeah.
the global south can absorb. And so you can produce all you want, but if there are no buyers, that's going to be a problem for a lot of your companies.
So that goes to my third point on exchange rate and treasury buying and sort of monetary dynamics. How do they feel about the US dollar and how that is going? Sort of, and then are they still going to be buying treasuries? Because if they need this terms of trade argument, does that automatically imply they'll have to buy the dollar for exchange rate reasons alone? Or how do you think about the
Well,
monetary dynamic in China?
to be honest, there may be some intervention in currency markets at the margins, but China, at this point, I don't see the People's Bank of China really, quote unquote, manipulating the currency that much. Part of it is China facing deflation right now and it has excess capacity. The currency is not going to be as strong as it should be. Is it perfectly fair market value? Probably not, but it's a lot closer than probably it was back in 2005 when they first started this whole process. So I think the currency thing was sort of a market-wide subsidy back in the day. I don't think that's the case really anymore. A lot of their companies are able to achieve certain efficiencies and cost competitiveness with or without currency support.
The fourth transition is 1.5 to call it 2.2,
Climate,
2.5. Yeah,
yeah.
climate. Where are they in climate? And obviously, they're making lots of industry investments in batteries, solar. Some of that, I think, is just economics, not really climate. But how are they going to be in a 2.2 world or 2.5 world?
Geographically speaking, I think like there'll be worse climate effects on China than the United States. Don't quote me on it, but from what I understand, having read and spoken to climate experts, just geographically speaking, China will experience worse like droughts and all kinds of things. Let's not forget they have way less arable land than we do.
Yeah. And the water issue is real, and hence the North-South diversion project.
The big pipeline. Yeah. China has always wanted to engineer their way out of these problems, right? But at some point, nature's they know this stuff. And I don't know if it's still the case, but Shanghai was always sinking by like a couple centimeters because they don't have the bedrock and they just keep on building on top of it.
Yeah.
But yeah, so this is going to be a problem. And I've been thinking lately, like, what are climate haven areas in China? Because we talk about it in the United States, the Great Lakes here in the Midwest and New England, Vermont, where I'm from, are all sort of climate haven areas. But it's like, what would that be for China? Is it borderlands with Russia? Is that going to be a climate haven or what? But that might be interesting to think about as when these things start coming home to roost in the next 10 or 15 years. And, would that lead to population redistribution in China too?
And how is that, in your view? To me, Tibet is a lot about water as well. I know initially it was about natural resources and minerals, but this dam they're building that's just like 5 or 6 times the size of the Hoover Dam, it's a pretty massive project that is going on there.
Yeah, Tibet and Xinjiang are just ginormous natural endowment. It's all about natural resources, whether it's water, minerals, oil, gas. Those two areas, huge amounts of natural endowments.
I want to sort of the last phase of this conversation, but it's really like the so what for our community. So if you're an investor in food and ag or energy or oceans or just a private markets investor, whether you're doing credit, venture, infrastructure, buyout, etc., what is it that, like, when we underwrite these companies to their core business plan, what is the underwrite of China, or in general, what do you think is the right thing to underwrite? Given the supply chains we're in, the sectors we're in, what are the right sort of things that you'd want to think about? Is there any advice that you have for people trying to underwrite these sectors where China plays a role in some shape or form?
Yeah. I guess I'll go back to one of my earlier comments. A lot of these sectors that we're concerned about competing with right now are not necessarily terrific businesses, like the solar industry. Like nobody, like even Chinese firms don't want to be solar firms right now. They're all rushing to become green hydrogen firms now. So they've all pivoted to hydrogen. So hydrogen can be quite interesting. I would say China, I think, is serious about building environmental carbon markets. It's going slow, it's tough, it's hard to set up, but I think they're actually quite serious about this idea of using markets to address a lot of the environmental and carbon issues. So that's another possible area in sort of the services. And I guess Obviously, AI data centers is going to be another sort of near-term one. They have hyperscalers in Alibaba and those kinds of companies too. I guess the big macro point is like, China's 18% of humanity, and they have, I think, much more challenging problems to solve with technology, infrastructure, engineering, and food and water is a huge part of that. How do they avoid sort of environmental collapse by doing all the things they need to do? So they're actually, I think, much bigger opportunities if you play it right in terms of using technology and capital to solve a lot of these problems, especially in your sectors, food, energy, and water. So I guess my big advice is waiting for the current oversupply capacity cycle to kind of finish, and then looking to see when the industry consolidates is when okay, here are the ones left standing, and these are going to be the businesses that are going to be good. So once that cycle is over, I think it's a good time to be investing in those companies again.
Obviously, the tariffs are still to be settled in terms of if you're CFO and you're trying to figure out your supply chain and you're in the energy business or the food business and you import stuff. It's complicated.
Yeah, if you're a macro investor, right, like you're basically going from a pretty well-run, efficient or low-cost system to one that's possibly inflationary, right? Like decoupling, however you want to call it, is going to be inflationary because China, as we said, is extremely good at deflation. So if you're a macro investor, I think you're just freaked out and concerned about secular inflation because of this process, if taken to its logical conclusion. So I think there's a lot of people that want to avoid, to the extent there's stabilization in that relationship, then people calm down a little bit more about that.
Yeah, I think the holy grail for me, just as a realist, and at least I try to be, like the most holy grail thing is, can you get the Chinese pricing and good quality? But if you can actually and produce it in America, that's a holy grail thing. Because I think we've convinced ourselves of this emergent U.S.-China adversarial or competitive relationship. And if you could offer the customer in America, hey, you get the same thing, but you can have a shorter supply chain, not just China, anywhere.
Yep.
Particularly post-COVID. I think that's a winning formula. It's just there's just not many of those businesses out there that can do things.
Like to the extent America can feel a little bit more secure about its own industrial capacity. And I found my way to being a bit more lenient in industrial policy, and I didn't expect myself to find myself there, but I've thought a lot about it, and I'm not sure what else we can do to get there really quickly. Like markets are great, but markets tend to avoid some of these things because they're not necessarily profitable businesses, but they're necessary capacity, right? So like, how do you get there? And so if the U.S. feels more secure, I actually think a lot of the problems probably goes away, or at least get toned down quite a bit.
And if you smooth the entropy and offer deflation and be shorter supply chain, you win. But
Absolutely. Yeah, that's the trifecta. That's the
right? Sort of anti-fragile.
Exactly. Totally. How do we do it in the Midwest?
Yeah, that is a central challenge. You need, I think, this combination of innovation, business motivation, and fit for purpose capital to really try at it. Because I'll give you a very clear example: generic APIs for pesticides. Lots of people in the Midwest want them. It is going to be hard to create some of these, whether it's insecticide, herbicide, like the active ingredients. You need like something that say, hey, we will use 25% of the active ingredient, but we've got this delivery technology or dosage technology that allows us to maybe not need as much. And so it's going to be this like, hey, like cheaper, faster is going to require some level of innovation. And then you have a business line innovation to figure out how to get that to market. And then maybe you have to have some capital that's a longer duration or some policy or civil society intervention that allows you to do it. But like replicating China Inc. is just not easy. Like you have, as you said, a collection of reverse NIMBYism, like supportive capital, intense competition between regions and different entities.
We need to learn how to cluster, like how do we cluster in the Midwest, battery stuff, magnets, and like how do we get that going? But then I don't know, maybe the South will compete with the Midwest. So there's a lot of things that go into it. And we haven't done serious muscular industrial policy for 50 years. So do we still have the muscle memory to get it going? And there's a litany of challenges. But I feel like if we're not doing this, we're just going to keep on sort of feeling insecure and complain about Chinese capacity.
And I would love to do it at this kind of how China does it, state by state, as opposed to some unitary federal thing. And we've done a little bit on this, but it's like the race to lower rates on taxes. That's what we've done. But there has not been like, let's figure out, and I think there are governors on both sides of the aisle trying to think about this, but no one has been bold enough to be like, let's go, do this fully in the way that China has done wind turbines or solar or battery.
Well, so part of the thing I've been thinking is just our mentality in America for the longest time, and rightfully has been that of abundance. We have everything. But now, if you look at a lot of these sort of industrial capacity technology areas, we should probably shift to more of a scarcity mindset. That might give us a bit of a kick in the butt, like things we really actually don't have at all anymore.
And I think if you could do industrial policy that both co-ops the America First constituency with sort of this emergent, I'll go back to where we started, this sort of Vermont Bernie kind of, and I think there's a way to co-opt both those stakeholders and say, okay, there is this left-right thing that you could bring around industrial policy, particularly I think in rural America, where there's probably a potential, like rural broadband reminds me of this, right? Hey, this doesn't necessarily pencil, but it's really important.
Totally. And I hope 2028 is where you get some kind of platform that starts to at least grapple with what that means. Just, like I said, part of it is like we are now playing catch up on capacity and industrial base. So we need to figure out how to run much faster than we currently are.
And if you think about like all these four transitions we're talking about, they could be highly inflationary or highly disinflationary. It's how we respond to them.
That's right. That's right.
Damien, I know it's late on a Friday. I really want to thank you for joining. I really enjoyed the conversation.
Thank you. Thank you so much, Sanjeev. It's great talking to you.
Thank you for tuning into the S2G podcast. If you enjoyed this episode, please subscribe, leave us a review, or share it with a friend. For more information or to connect with us, check out s2ginvestments.com.